Thanks for staying with us. Now, prices of some goods and services have witnessed some marginal increase on the market. This was after some businesses started applying the 2.5% VAT increase to their customers. Here's more in the following report.
This follows the 2.5% increase in the VAT rate, bringing the actual rate for the tax to 15%. Some have argued that if you add the National Health Insurance Levy and the Get Fund Levy, the total rate payment for consumers may be way higher than what that has been communicated. Some firms like DSTV Ghana in a text has told consumers that from January 1, 2023, after the assent of the recent VAT amendment bill, the DSTV premium package price has been increased to 440 Ghana cedis. In the coming days, some other service providers would also be announcing an increase in prices of their goods and services in line with the revision to the VAT amendment bill or the VAT law.
Let's get on Zoom now and speak to former Finance Minister Sir Tekbe for more clarity on this. Hello, sir. Thank you so much for your time on Business Live. First off, let us understand that can the Ghana Revenue Authority go ahead to implement the 2.5 VAT increase as well as other fees and charges with the required regulations?
Yeah, thank you very much for the question. Yes, the Ghana Revenue Authority can go ahead if the legislation that was passed by Parliament takes immediate effect, which is why sometimes, because we are dealing with tax issues, Parliament stays overnight, or deep into the night to pass the legislation in order that there wouldn't be tax evasion and avoidance moves. Where the law requires that the tax should come into effect at a certain date and specifies the date, then again, on that date, the GRA can go ahead and collect the taxes. There are instances, a few, where the minister may be given, the discretion to determine the dates. And most legislators don't like discretions, most legislatures. But in that instance, the minister may then issue, if the law says he can do that by regulations, then he would have to issue the regulations, go back to Parliament, for the legislation to be passed. When we say that the minister issues regulations, the regulation is actually a subsidiary legislation, which has to go back to Parliament, unlike other countries. So yes, once the law is passed, in the case of taxes, then it becomes effective. From immediately the president assents, to the tax, unless the law itself gives a different effective date. In general, where the law says the minister should, issue regulations, the regulations normally have to do with clarifications of certain matters or further expatiation of, specific sections. Rarely does it actually talk about an effective date for implementing the tax. But if businesses have to prepare for the tax, for example, a good example is the e-levy, because it is new or it was new then, and businesses would have to adjust their computer systems, or those who have, or even the GRA itself may have to, for those who the returns which have to be filed and others, then in that case, the law may require, the minister to issue regulations with respect to some of those things, or empower the minister to implement the tax at a future date. And usually even legislatures like the date to be specific. They do not like uncertainties and giving discretions to ministers of finance.
But what do you make of arguments that there are still some elements of double taxation with this VAT, and maybe more education from the regulators on what would have helped?
Well, the issue of double taxation is what you also call a tax on tax. You will recall that when the VAT was legislated many years back. It was legislated at 15%, and then it was cancelled, and on reintroduction, it was the rate was fixed at 10%, a much lower rate. Around about 2000, the VAT was increased to 12.5% from 10%, but the amount was dedicated to the Get Fund. Then again later, there was another legislation. No, I believe that was in earlier. Then there was another increase of 2.5%, and the amount was dedicated to the National Health Insurance Levy. In both cases, the VAT was charged for a long time as though it were VAT, and I will explain shortly why it was charged as though it were a VAT. Two reasons. Then the Ghana Infrastructure Investment Fund came much later, and that was a 2.5% increase. That also to date is actually collected as though it were VAT. Now, when you say it's collected as a VAT, the unique thing about the VAT is that because VAT is a consumption tax, like excise duty, tariff or customs duty, it is the consumer who pays. It is not the business. But before the product becomes final, business inputs can be sold by one business to the other. If the tax is imposed on those inputs and nothing is done, for example, businesses are allowed to defer the payment of the tax until it reaches the consumer. Or in the case of the VAT, you will collect the output VAT, that is the VAT on your sales, that because you used inputs to get the sales, that is inputs, that is purchases plus profit to get that, to get that output VAT, you would have paid VAT on the inputs. Now, if you are not allowed to offset the VAT you paid as a business or the inputs against the VAT that you are charging, because the tax on the inputs have been collected and paid to GRA already by whoever sold to you, then if you are not allowed to do that, then the business has a right to treat the tax on the inputs as cost. In that case, so let's illustrate. If I bought inputs of 100, and let's simplify it, and I pay 10%, it means that I'll pay 10 Ghana cedis to whoever I'm buying the items at 100. If I add profits and my other inputs at, and I end up, with additional cost of 20, the value of the item is 120 without the tax. But remember that 120 includes 100 on which 10 was paid already. Now, if I charge VAT to the consumer, let's assume we don't have to prolong it, that now I sell to the final consumer, I will charge 10%. That is 10% of 120, and that is 12. But that 120 includes 100 on which 10 was paid already. So I'll be allowed to deduct that 10 from the 12, and I'll pay on it 2. So in that case, the total tax is 10 that was collected by the one who sold to me, and 2 being the value that I have added 20. That's the name, that gives the name of the tax. So the tax ends up on the value which each seller, has added in the process until it gets to the consumer. If this is not done, then the 10 will be added to the 100 to make it 110. And the 20 will be added to make it 130. And in that case, the VAT to be charged will be 13, not 12. The 1 is the tax on tax, because the 1 represents 10%. That's the 12, 13 minus 1, which is 1, is 10% of the tax of 10 that was charged already. That's what we mean by tax on tax. So when the government removed the Get Fund and the NHI from the VAT base, they stopped businesses from claiming that input tax. So to that extent, any NHIL that was paid on inputs will keep adding to the cost. I hope you get me. Will keep adding to the cost because they are no longer part of the VAT. They call them straight levies. In the past, they were part of the VAT, which was a 17.5%. So the cost will keep multiplying itself until it reaches the consumer for as long as inputs are passing between business and one business to the other. This is why there are two arguments that by removing the Get Fund and NHIL and calling them straight levies, like other levies, COVID levy and the rest, they are adding to costs and you are imposing VAT on them each time the commodity or supply changes hands. And that does not make the tax efficient. Okay, on the other hand, the argument that the VAT is an increase from 12.5%, that's a recent increase of 2.5%, was an increase from 12.5% to 15%, is also dismissed by other people who say that the VAT was already 17.5. And so by just separating it between VAT and straight levy does not necessarily make it that we are no longer paying the VAT. And therefore, the substantive rate of VAT, which has been in existence since 2018, is 17.5, and you are only adding 2.5%. And therefore, the actual rate is 20%. And just tell Ghanaians that the VAT rate is 20%. You know, the fact that you have taken it and called it a levy is neither here nor there. In fact, that in itself is rather adding to the cost of production and adding to prices, which some argue underlies the rate of inflation that we are seeing today. It's part of the reason for the rate of inflation.
Okay, so being a former finance minister, do you think that this is the way to go?
Well, let me talk as a tax expert, as a tax somebody who has been, when I say expert, has been giving advice, to countries, including Ghana. No, it's not the way to go. Because if you do that, if this is what we want to end up with, a tax on tax, then there was no need for us to reintroduce the tax after Kunipreku. The only reason VAT replaced the old sales and service taxes were twofold: to have a uniform, consumption tax system. Remember I said the tax system is on consumers. And then secondly, to alleviate the VAT which businesses pay on inputs so that they don't pass it on to consumers. And this is what has prevailed until now. So yes, we may need, revenue. Yes, we are in a tight situation, but in the end, you are making the tax inefficient. You are raising taxes inadvertently, so as long as they are moving in, and you end up making the work of GRA very tough because businesses would begin to practice what we now call, everybody knows, to be tax evasion and avoidance. And in fact, time permitting, I can show that since this move was made, the tax hasn't brought in as much revenue. If you are thinking that you remove it so that instead of allowing the business to take a credit, it's not ending at that way because it's encouraging evasion and avoidance. And this is the same as the so-called withholding, VAT on those who have not registered for VAT, when their goods come to the port. Again, it's a duplication because the customs laws do not say that you must be registered before you pay VAT. In fact, if you were to import a vehicle as an individual, customs will collect the VAT. It doesn't matter whether you are an individual and you are registered or you are not registered. If, however, a business imports a vehicle, and there are limitations anyway, but let's assume they import a vehicle or they import inputs, because they are registered, they will pay the VAT, but they will have the right to deduct, again, the input tax that we are talking about. So that invoice, that customs entry, is enough for customs, for GRA to enforce compliance. So by going to withhold again for somebody who is not registered as a business and all that, it is not like an income tax where you can claim a credit for any withholding tax that you pay. And I'm not registered so that I can take a credit. So what is the mechanism we are putting in place? We are confusing the income tax, with the VAT. So in essence, what I'm saying that in our rush, we are industries, we all know that, and that's why we used to have the temporary taxes. We should not also create situations that would make it difficult for businesses going forward.
We leave it here, sir. Thank you so much for your time. That was former Finance Minister Seth Terkper giving us some clarity on the implementation of the 2.5% VAT increase. That some leading oil marketing companies, OMCs, have begun reducing prices of some petroleum products at the pumps. Now, market leader Goel has announced more than 8% reduction in fuel prices. It has slashed the price of diesel by 1 cedi 50 pesos. On the other hand, petrol is going for 12 cedis 40 pesos per litre, representing a decline of 1 cedi. Let's go on the line now and speak to Executive Secretary of the Chamber of Petroleum Consumers, COPEC, Jan Kanamwa. Thank you so much, sir, for your time. We have seen an 8% reduction, but to many, they expected the reduction to be more. Does this reduction reflect consumer expectations?
No. And then again, it's also a mixed one because there was some unfounded expectation to begin with, where you had some media outlets reporting petrol, diesel to sell around 9 Ghana cedis for this first window, January. That, if you do the numbers, looks quite impossible or improbable. The expectation would have been that, of course, we could see the three major players also decline to about 11.7, 11.8. But as it stands, as of this very time and minute, only Gold seem to have adjusted their prices downwards by some 8%, which is equivalent to about 1 Ghana cedi every litre for both petrol and diesel. We would have expected that they will go down a little further by some 40, 50 pesos to reflect the city's performance or strong showing towards the end of last year and where it is currently. Unfortunately, we can't say that we have seen the sort of reduction that we expected. But then again, the public expectation was also overly hyped or hiked to expect something around 9 or under 10 cedis. That we can put on record is unlikely to happen. But anything around 10, 11, 12 Ghana cedi for us is probable, and we expected that prices would have declined to that level.
But the question is, are these reduction sustainable?
For the first window, January, yes, they could be sustained through the month January. Unfortunately, if you talk to the BDCs or the fuel importation space, you get the impression that the dollar has begun crawling up again. If that is also to get any sustainability, then you are looking at a situation where the gains we've made, for which today Star Oil could sell around 10 cedi 99, they could all reverse, the other way in no time. So it depends on the Bank of Ghana and the monetary policy people and how they manage the forex situation. If we sustain the gains we made towards the end of last year, I'm sure the first quarter could be good. Then again, you also have government thinking of this gold for oil initiative. We would only call for caution. We would only call for a much thorough stimulation or simulation of the program in order that the problems that we faced last year, which one had to do with the forex, two also had to do with the global price hikes that we saw or development. If we need to find a solution to them, our expectation will be that the solution will be holistic. We've seen the gold for oil program and what the proponents are suggesting so far. There are a couple of buts in there. that we wish to get addressed before the program kicks off. But if that were to be done properly and rightly, maybe you could have fuel prices quite stabilized, at least for the first quarter of the year 2023.
What are some of the plans that you have put in place to ensure that for government to hear your side, or to hear your options that you have regarding this gold for oil thing that you're talking about?
There's a lot of stakeholder engagement. We had two before the year 2022 came to an end, one with the NPA, two with BOST. In the coming days, we'll probably be meeting other partners to the program, i.e. GOIL, Ministry Energy, inputs that we have. We are quite certain to put forward those inputs, and hopefully the proponents would probably listen to some of these things and add them to whatever they are proposing. But what they have presented so far, a few loopholes here and there, which they would need to address. Other than that, we probably will get into a barter system that has a lot of, opacity, that could also see a lot of corruption, inbred, and that could also see inflation even go up because you are looking to use the local currency cedi to buy the gold from the mine. You are looking at between 3 and 4 billion Ghana cedis every month in order to be able to buy gold that we have led to the intermediary who now pays for the oil we import. There's quite a lot of, transactional issues in there. The numbers would have to be streamlined properly so that you are not looking to cure the forex situation, but you create an inflationary pressure that comes back to further add to the forex problem that we had. And so when you are reconverting the oil you got through your gold exchange program, then you now have to use the same forex rate that we are all running away from, which could also be spiked because of the inflationary pressures that the 3-4 billion injection in buying gold could cause to your economy. Could also cause. So we think that, it's a very fine idea, not bad, but a lot of work needs to be done before we probably bring in the first oil. Secondly, strategy. You have Dangote refinery coming up. You are fortunate to have a private refinery called Central Refinery, also in Tema, not far from the Tema oil refinery, also set to get operational within this month. What is the government's strategy to ensuring that 100,000 barrel per day refinery comes to contribute to fuel security and then also affordable prices at the pump for everybody? We have not heard much as far as the policy bit is concerned. Unfortunately, it looks as though our only focus now is on the gold for oil program, and we thinking that that probably will solve all the problems. We would call for caution and say that we should broaden, our alternatives so that the year 2023, if you read the forecast out there, China, what OPEC is asking to do, cutting numbers, what the Russia-Ukraine situation could further add to our oil prices, we need to have a strategy to cope with these things. If we sit and get caught ball watching, what happened in 2022 when diesel ended up 24 Ghana cedi and beyond, I'm sure in no time would repeat itself. So we need a much more coherent strategy to deal with 2023 altogether.
Thank you so much, Duncan Amoah is the Executive Secretary of the Chamber of Petroleum Consumers, COPEC. Now, away from that, the Ghana Union of Traders Association, GUTA, is calling for a review of the investment laws in the country to prevent foreign firms from repatriating full profits. Now, according to the president of the association, Dr. Joseph Obeng, government must address basic structural challenges within the economy to forestall perennial economic challenges before the International Monetary Fund program kicks in. He spoke earlier on the AM show.
IMF will come, they will make some injections into the economy, but if we do not look at the structural problems that is militating against the economy, then it will come and we will not have any effect. The same thing will replay. That the sharks, the hawks, and the pythons in the economy will swallow whatever injection that the government will do. That's why we have always been saying that we have to revisit our investment laws to make sure that the repatriations that some of these multinationals do, that the areas that we have capital flights, the cross-border trading, trade of money, and all these things should be looked at. How we'll be able to retain some of the forests that we have for ourselves as a country. What laws are we making that a foreign country, foreign direct investment that have been successful here do not take all the gains, but make sure that at least 30% is retained for redevelopment of the country. If we do not do this, then we are going to have a perennial problem that will not help. So our problem is very structural. And even before we assess the loans from IMF, we should be able to address these problems first.
And that's our show for tonight. Thank you so much for your time. For more news, you can log on to myjoyonline.com/business for more. My name is Beverly Broohm. Have a good evening.